make 1% weekly if dividend stocks have low implied volatility. Oh, I love Sealy and Cutie. Why couldn't your parents just name you Peter or Ted, Oscar, Ralph, Tom, Tim, Jeff? I love Oscar and Cutie. Okay, how do I make 1% a week? Well, let's go back and take a look at Nucor. I'll show you Nucor. Because apparently he doesn't understand math. Okay. So if you like Nucor, your 30-day high drops down here, turns around, shoots up, 142.93. I like the 143. So let's see the 143s. And I love Cutie, Sealy and Cutie. Pay attention. It's going to show you. Let's get rid of this. Let's change this to a covered call. Now, if you don't understand what a covered call is, there are literally hundreds of videos. Hold on. Drop my pen. At least it wasn't the soap. Some people get that joke, some people don't. All right. A covered call, simply put, I'm buying the stock at a certain price, 142.93. That's what I'm buying it for tomorrow morning. Okay, 142.93. That's what I'm buying it for tomorrow. Tomorrow morning, first thing in the morning, 142.93. The closest strike price right here. See, strike 139, 140, 141, 142, 143, 144, blah, 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 blah. For those of you who can't see these little tiny numbers, okay, this screen right here is live on YouTube. So whatever channel you're on, there is a bio top left, wherever it may be. Click on that bio, go to the website, and it tells you how to get to the 10-Minute Trader on YouTube. And it's live streaming as we speak on YouTube. So you can go into your other room on the big screen TV, and you might be able to see these numbers a little better. So 142.93, I'm going to sell it at 143. Now, I'm going to buy it and sell it at the exact same time using a trading strategy called a covered call. I buy the stock, I sell the option. It gives somebody the right, not the obligation, to buy it from me anytime they want between tomorrow morning and Friday at 3:59 p.m. when the option expires. I'm doing weekly. Remember I said rule 4, weekly options only? 19 September, that's this Friday. Let me go over this way. 19 September, that's this Friday. 26 September, that's next Friday. 3 October, it's 2 Fridays. 10 October, 3 Fridays. 4 October, 4 Fridays. 24 October, so on and so forth. Every single Friday, one of these options are going to expire. Now, I want cash flow on a weekly basis. So this week, I'm doing 19 September. That's this Friday. Monday, I'm doing this one, 26 September. That's next Friday. And then the following Monday, I'm doing this one, 3 October. Every single week, I'm doing one of those because I want to collect this right here. Whoops. Whoops, it's not there. Let me change this. I want to collect this right here. This is the premium. So the 143 premium is $2.30. That, my friend, is more than 1%. That is how I get 1% every week. I buy a good quality stock that's consistently profitable. I buy it just before the dividend date to make sure it's on an upward trend. I take a look at the chart to confirm that it's on an upward trend. I buy it $142.93 and I sell it for almost the exact same price I paid for it. So if I'm buying it at $142.93, I'm selling it at $143, 7 cents away. So you may think you're doing all this work for 7 cents. No, you weren't paying attention. I'm collecting the 7 cents and I'm also collecting this, $2.30 per share. So every share I get $2.30. So for one contract, that's 100 shares, that's $230 per contract. Well, $230 might not be a lot, but when you have 10 contracts, that's not $230, that's $2,300. Okay, 100 contracts, that's $23,000. So the more contracts, the more money. So I'm going to show you one contract, then you decide, well, hey, if one contract is this, I could probably do 18 of them. Well, 18 times $230, huh, that's a nice little paycheck every single week. Because weekly optionable stocks have weekly options every single week. And as long as I own the stock, 142.93, I can sell the 143s this week. If someone buys it for me, fine. I could buy it again on Monday, do it all over again. Or if they don't buy it from me on Friday, I could do the same thing again next week. And then the following week and the following. I like to give it an example. Like, think of it this way. We're going to do a trade so you can understand it and you can see how it works. Covered stock, there we go, the 143 right there. One contract, boom, 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 boom. Mr. Sandman, bring me a dream. Make him the cutest you've ever seen. Okay, so here's the trade right here. Now, remember the part where I said simple, safe? Now, this strategy is simple because you're just buying the stock, you're selling for the same price you bought it for. Safe, it's one of the few trading strategies you can actually do in your IRA. Because you can't do every trading strategy in your IRA, and you're limited what you can do and what you cannot do. But a covered call is simple and safe. You can do it in your IRA. It is safe, so safe they say you can do it in your IRA. So that being said, let's read it, and I'm going to explain it as we go. So you can listen to what I'm doing, and then you can take a look at it and say, yeah, that kind of makes sense. Because out of everything you're going to learn tonight, I want you to walk away with one question in your head. Does it make sense? 4 words. Does it make sense? So let's find out. Buy one covered call of Nucor, NUE, 100. That is the weeklies. 19 September 25. Well, that means this option expires this coming Friday. The 143 call option, that means I am selling somebody the right to buy it from me at 143. Remember, I'm buying it at 142.93. I'm selling it to someone else. I really don't care who buys it. Someone's going to buy it. I don't care who it is. I don't. They're going to buy it at 143. Okay? At the market to open to open. Now, when it says to open, I didn't stutter. Okay? I didn't repeat myself. To open means it's 2 orders. I'm buying the stock. That order gets sent to New York. The stock market in New York. The second to open, that's an option order, and that's going to Chicago. Chicago Board of Options Exchange, CBOE.com. 2 orders to open. So, maximum profit, $247 for each and every contract. Well, think of it this way. Let's say, hypothetically speaking, they got a new company out called Nucor, and they make these vending machines. And a vending machine, well, it's going to cost me $14,000. Well, if this vending machine is going to give me $247 every single week, or close to it, this week it's $247. Next week it might be $263. It might be $189. It might be $76. But it is going to give me a return every single week until I sell it. Now, remember rule 2, never sell for less than what you paid for it. Well, if I'm buying it at $142.93, I refuse, and I'm going to repeat it again, absolutely refuse to sell anything for less than I paid for it. Because you don't lose money in the stock market because the stocks go up and down. You lose money in the stock market because you agreed to sell something for less than what you paid for it. If I buy it at $142.93 and it drops down to $75, and I said, I'm going to take the 75 before it goes down lower, it's my own damn fault. I could care less about the stock price. The reason why I could care less about the stock price is because if the company is consistently profitable and they increase the profits every single year, regardless of whatever the stock price is, I'm going to get an ever-increasing dividend year after year after year. And as the stock drops or goes up, so do the options. So if I buy it at 142.93 and it drops down to 75, I'll be selling the 78s, the 79s, or the 80s. Whatever is close, but not too close, because every single position that I have, every single one, has a weekly option against it and a cash flow coming in. Now, some of them get 2, 3, 4% every week, and some of them get 0.5% or 1/4% because of extenuating circumstances. That's why we look at it every single day. Monday morning, I take a look at all my positions. I have whatever cash I have available, and I buy new positions. And then by Monday at 10 a.m. or 11 a.m., I'm off to the next venture. Maybe I'm going to the beach. Maybe I'm going to hang out with my grandson playing in the pool. I don't know. I don't want to sit in front of my computer doing this crap all day. No. 10 to 15 minutes, I'm done. I'm moving on. Let's keep on going. Maximum profit, 247. Cost of the trade, including commissions and fees. If you're buying a vending machine, the cost of the vending machine, $14,000. So let's find out what is the rate of return. What do we have over here? Can you throw a brick on a stove? Okay, it's a game of emotions. Options and future stocks are very risky. Thank you, Overlord. I didn't know that. I've only been doing it for 30 years, but okay. Jerry, that's why you lose. Overload, you let emotions make the decisions. Appreciate the channel. Thank you, Tross. All right, so to find out my rate of return, I'm going to go take a look at my calculator and punch in some numbers. Now, the interesting thing, the numbers change, but the mathematical equation stays the same. What did I buy it for? What did I sell? Where's it at now? Where's it going? What does it mean? What should I do? Simple. David, that's an inappropriate question. I lost a lot of money in intraday trades. Okay, Overlord, I don't do intraday trades. Okay, see, I've been trading for 30 years. My first 10, 15 years weren't that great. My last 15 have been consistent and predictable. So, yeah, my first 5 to 10 years weren't that great. Now, I admit that. I lost a lot of money and I made a lot of money. Okay, calculator. To find out your rate of return, you take your trusty old calculator and you put in your profits, 247, 247. And you divide that by your investment, $14,053. Grand total of 1.7%. So somebody asked, who was it? I love Sealy and Cutie. Okay, so Sealy and Cutie, you were asking how I get 1.1% a week. Well, this trade right here is make 1.7% this week. And there's only 3 days left. Monday and Tuesday are gone. Think about it. Okay, from Monday morning, 9 a.m. until 4 p.m. Friday, that is the maximum amount. You can't get any more time than that. Stock market opens at 9:30, it closes at 4. That's the maximum amount of time in a week, 5 days. So Monday's gone, you just lost 20% of your possible return. Well, Tuesday's gone too. Now we're down to 60%. If I had done this trade on Monday, it may have given me more money. May have. But the setup wasn't quite right. And if it didn't work for this week, well, I could always look at what it looks like for next week and do that way. So 1.7% is not that bad. I'm going to write that one down. 1.7. Nice. Now, that is not a stock tip. That is not a recommendation. It is an observation. You give me a stock, I punch it in, I look at the numbers, and I show you these simple. And it's the same exact thing I do every single night. Okay, if you go to the website, The10MinuteTrader on YouTube, and you see I have 1,200 videos, and they're all basically the exact same, just like this. Every single night, I'm doing the exact same thing, and I'm saying the exact same thing. Okay, 5 simple rules, 5 simple criteria. If the stock works, great. It's always the same. It's repetitive. And if you're not ready for something repetitive, this is not for you. Okay, so we looked at Pepsi. We looked at Nucor. What's next? Who wants to go next? Come on down. You're the next contestant on Pick a Stock. What do you think about Goodyear? Goodyear? Well, let's find out. What do we think about Goodyear? Got to set this all the way back to the beginning, which is right here. Goodyear. I'm going to say no to Goodyear. And there's a good reason why I'm saying no to Goodyear. Are you ready for it? Here it comes. Who came up with Goodyear? I don't know who came up with it. Someone did. Anyway, September, October, December, January, March, April. Those are months of the year. Okay, now the interesting thing about months of the year, there's only 12 of them. So if I'm going to make a trade 1 month at a time, that's only 12 checks I'm going to get. And if I get 1 to 2% each time I do a trade, that's only 12 to 24% at the end of the year. Well, I'm retired, so I really don't mind doing this every day and doing it every week. Now, I don't do as much as you think. So whatever you think, yeah, unthink it. Say, I'm on first thing Monday morning. How much money do I got? Great. Maybe I can get 1 or 2 shares, 1 or 2 stocks. Okay, well, what is this one at? Great. What do I do? It doesn't take long, 10 to 15 minutes. It was created for a 9-year-old. It's working now, so just don't touch it. Yeah, I get it. Creative journey. We have... Uh-oh. Pepsi has their hands in everything. Ooh. Rafi wants to take a look at FedEx. All right, we'll take a look at that. Do you want the strike price in the money or out of the money when setting up the covered call? Joey, great question. I don't really care. It's a numbers game. What's the stock at now? It's not difficult to find out where it's at. Here's your high, here's your low, here's where it was, here's where it is, up, down, now it's going up again. Well, great. It tells you what it's doing. Here's the bottom here, now she's going up. Okay? Now, if I buy it at the current price, $8.52, and I sell someone the rights to buy it from me at $8.50, well, I'm collecting 2 cents. I don't do monthlies. The numbers just don't work. Let's find one that we might like. Macy's. Uh-oh. There we go. All right, Macy's at $17.43. Okay, the $17.50 is going for 27 cents. Well, it's a numbers game. What am I buying it for? What direction is it going? What is the safest trade so I don't lose my money and I have the cash flow come in? Oz. Damn you old bro. Yep. Thank you, Oz. You know, when you're 61, I hope you look as good as I do. Okay, I went to the class reunion a couple of years ago. I've seen my other classmates. There's about 3 or 4 of us that look this good from, see, I wear the same size as I did in high school. Okay, I still have my leather jacket from high school. I have my leather jacket with a big M on it. Okay, I was a jock. So I still have my leather jacket. I was going to wear it, but circumstances not here. So I still have some of my clothes from high school. And a lot of the kids I went to high school with, bald, fat, flabby, yeah, no thanks. I look pretty damn good for 62. You can keep your comments to yourself. You look like you should be tired. I am tired. Sit on the beach with your family or something. Okay, I'm getting ready to, on that note, January, we're taking the show on the road, getting a boat, and I'm going to do the Great American Loop. I've been wanting to do it for 10 years, or more than 10 years. Jump on a boat, just go around the Great American Loop. It's going to take about a year. I want to go from port to port to port, sharing what I know with everybody. So if you guys want to come, you're all welcome to come. Okay, just pay attention. You'll see where I'm going to be next. Show up. Come on the boat. Hang out. I forget where I was going with that. Oh, so anyway, to answer your question, each and every trade is just about the same. What am I buying it for? What am I selling against it? What direction is the stock going? What does it mean? Is it a safe trade? Because it all comes down to the same question. Do I like this company? Am I willing to hold on to it until it hits my target? Well, if I'm buying this one right here, Macy's, at 1743, I'm going to sell the 1750s, which are right here. And they're going for 27 cents, which is more than 1.5% return for 1 week. Okay, you have to decide, number one, does it make sense? Number two, do I like this company? There's 10,700 different companies. You don't like Macy's? Fine, find something else. There's a whole bunch of them out there. Okay, creative journey, thank you. Oh, check that out, Sherman. Thank you, Sherman. Woohoo. All right, where am I going? Back. All right, right here. Ooh, Trey Guy wants to take a look at Riley. Jordan Bethlehem, thank you, was curious. Okay, thank you, Cody. Trey Guy wants to take a look at Riley. So I actually do have some Macy's. Actually, I'm short on Macy's. That's not good. And I don't normally do that, but it just happened that way. Riley, here we go. Same thing as everything else I do. The high, the low, where was it? Where is it? What's it doing? Down, up. Okay, that's simple. The current price, $6.75. It's going to be a no because it's at a 30-day high, and I don't do things at 30-day high. Okay, what do you think? Up, down, up. It looks like there's going to be profit taking. Don't get me wrong, I like Riley, and I do trade Riley over and over and over again. But I don't ever buy anything at the high. It just doesn't make sense to me. Buy low, sell high. When have you ever heard someone say, hey, Riley's at an all-time high. Let's buy it and wait for it to go higher, a place where it's never been before. Doesn't make any sense. Not to me anyway. So Trey Guy, I'd say in a couple of weeks, we'll put Riley on the list. 2 weeks. Oh, look at that. Only Ford's on the list, 2 weeks. Okay. Sam, SSTK. I never even heard of that one, Sam. SSTK. I'm going to say no, Sam. I don't do monthlies. The numbers just don't work. Once a month does not work for me. Raffine 1, FedEx, FDX. The FedEx dudes. Ooh, interesting. High, low. Where was it? Where is it? Up, down, sideways. 227.70, 228s, 220.50s, 890. Oh, hell yeah. That's close. That's a little less than 4%. Well, I like 4%. But do you like FedEx? Well, let's take a look at the numbers for FedEx. A year ago, 289, we topped out. We got a double high at 308. Check it out. Double high, 308. Okay, from there, she dropped. Uh-oh. Prove that I'm human. I'm human. There we go. All right. We bottomed out in the second week of April. That's the bottom. Now look, from the second week of April, shoots up. Whoops. Shoots up, pulls back, shoots up. All right. Well, what does that mean? All right. Last 30 days. Okay. Same thing. High, low. Where was it? Where is it? Look, it's down, up, down, up, down, up. If you like FedEx, it always comes down to that questions, because it's always the same 5 questions. Number 1, does it make sense? Number 2, do I like this company? Number 3, am I willing to buy it, hold it, never ever sell, do a covered call every week, collect a premium every week, never sell until it hits my target? Well, if it's currently at 227, my target's 227.50. Well, it's giving me $8.90 per share. Let's do this one. But let's take a look at the chart. The last 30 days. There you go. Last 30 days. High, low. Where was it? Where is it? Down, up, down, up. Simple, right? All right. So 227.50. Let's take a look. 227.50 right there. One contract right there. Market, there we go. Confirm send. Here's Johnny. Buy one covered call FedEx 100. That's the stock. Buy one covered call FedEx 100. That means it has a weekly option attached to it. 19 September 25. The 19th of September. That's this Friday coming up. 227.50 call option against the stock at the market to open to open. We've already discussed this. Profit not $902 for one contract, 21 grand. Hell, I'm writing this one down. It's FedEx. Come on, you know who FedEx is. Now, it's not a tip. It's not a recommendation. It's an observation. Okay, so 227.70. Now I'm selling the 227.50s. Means I'm selling it for less than I'm paying for it. Think about that for a second. If I'm buying it at 227.70 and I'm selling it 227.50, well, I'm losing 20 cents. But I can easily take that 20 cents off of this 900 bucks. All right, so let's check it out. Calculator, where are you? Come out, wherever you are. 902. 902 and 50 cents for those of you that are anal. Divided by the cost of the trade, including commissions and fees. It's right there. 21,840. I'm going to show you something. I don't normally show it, but I want to show you something interesting for you naysayers out there. Okay, so 902 is the profit. It's going to cost 21,848. Grand total of 4.1% for 3 days. Wednesday, Thursday, Friday. And if it doesn't fill, okay, or if the stock goes down, I'm going to do it again next week. And if that doesn't work, I'm going to do it the next week. And then guess what? I'm going to collect the dividend and I'm going to do it next week and then next week and the next week. I'm going to keep on doing it. I'm going to keep collecting dividends because FedEx keeps increasing their dividends, keeps increasing their profit. So hell yeah, why the hell not? Anyway, what I want to show you is this right here is the trade. It gives you the information. It's called order confirmation dialogue. It tells you everything before you hit this button right there. Because once you hit that button right there, it gets sent to the market maker and he fills it. And it's a market order. See, where is it? Market order. That means the market maker fills it as soon as it gets there. It's not a limit order. A limit order is like, hey, this is what I want to pay. Or, hey, this is what I want to get. That is a limit order. You're limiting the market maker's choices. I don't care about that because I know what my profit is right here. And the interesting thing doing a covered call, buy a stock, sell the option, is they're tied together because it's one trade, buying and selling at the exact same time. I know what my profit is. But what I didn't show you, ready for this? 21,848. That's all cash. Now, I always tell people, do not use margin money until you understand the risks involved that come along with it. Okay, so margin money, if you put in 50 grand, the market maker is going to put in 50 grand. Now you have 100,000 to play with. No, you don't. You have 50. Okay, that money is borrowed money. 50 of yours, 50 from the market, from the broker. So they're perfectly happy giving you money because you know why? You're using their trading platform. They know 100% certain if the stock goes down, you're losing your money, not theirs, because they control this. All right, so let me show you when you're ready for margin what is possible. Got to prove I'm human over there. Okay, so if all cash is 21, margin is 10. So let's see what the rate of return is for 3 days using margin money. Now, I say don't use margin money until you understand the risks. So I've been doing this for a long time, so I don't mind the risks. 902, and I'm going to divide it by buying power effect, 10,463. 10,463. comes to a grand total of 8.6%. Now, somebody was asking, how do you get 1% every week? This trade right here is 8%. Okay, you're concerned, how do I get 1% a week? This one's 8. Now, remember, it is a safe trade that, yes, you can do in your IRA. Because it is a covered call, you own the stock. You're just selling someone the rights to buy it from you at a certain price by a certain date. For me, Monday I buy all my stocks. All my options expire on Friday. And every once in a while, I'll push them out another week. So sometimes I have options expiring not this Friday, but next Friday. Okay? So I could deal with 8.6% for the week. I'm writing that one down. FedEx. All righty. Next, what do we have over here? I was ignoring you guys over here. Didn't mean to do that. La, 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 la. All right, I'm going to grab my chair. Standing up all day gets to the knees and the feet after a while, especially when you get in your 60s and 70s. Ugh. Oh, let's get rid of this. We don't need that. Get rid of that. Get rid of this. Get rid of this. Get rid of this. Back to where we started from. Here we are. All right. Oops. You didn't fix the screen. Yeah. Lowe's. Oh. Martell Jr. wants to take a look at Lowe's. L-O-W. Nope. I don't buy anything at the high. See where that's at right now? No. I feel bad about this. Overlord, you're definitely in the wrong place, dude. You really, really are. Okay? Like everything you've asked me. Hey, Dylan wants to take a look at Procter & Gamble. We'll look at that in a minute, Dylan. Okay? Sit tight. Overlord, everything you've asked points in the direction that you are in the wrong place. Good stuff. You're a legend. Thank you, Ace. So anyway, Overlord, the reason I say that, okay, some of you people are going to get this as soon as I say this. Overlord wants to take a look at Nvidia. Nvidia is a dividend stock, but it's not a cash-producing dividend stock. Okay? NVDA. Now, I'm not even going to look at the charts. We're going right to Yahoo Finance and looking at the financial information on Nvidia. Okay, so I hope you're paying attention because apparently you are looking for something and you don't really know what risks you're taking. You like Nvidia. Hey, nothing wrong with it at all. It's $175 per share. Okay, so let's look at all the dividends that Nvidia has offered. Hey, Big C, woohoo! Thank you, dude. Let's look at all the dividends Nvidia is paying. I'm not even going to go anywhere. Take a look at this. 1 penny. 1 penny. 4 100ths of a penny. You're paying $176 to collect 1 penny in dividends. Explain that to me in a manner in which I'll understand, because that makes no sense to me. Hold on, it gets worse. It really does. We're going to go to the summary next. Okay? Just sit tight. The summary for Nvidia. It gives you an idea of what the rate of return is, what the cash flow looks like, and all that kind of nice, neat, fun, interesting information. Okay, previous close, market cap, beta, price earnings ratio, earnings per share, $3. $3.45 per share. That's what the earnings are for Nvidia. The dividend forward and the yield. You ready for this? See, I don't know how many people can count this low. Okay, I usually say, how high can you count? No. How low can you count? What is that one? Big C, thank you. How low can you count? Okay, you're paying $175 per share. What is your rate of return? Right here. You ready? 0.02% for the year. 0.02. I'm showing you how to get 1% per week. No, you want to investigate 0.02. Hold on. It actually gets worse. It really does. So now we're going to go to statistics. That gives you some more interesting information on this wonderful stock that you call Nvidia. And then we're going to compare it to a company that's 100 years old and has a larger dividend and a lot more of everything. Hold on a second. You're going to see this. Here we go. Nvidia right here. Revenue per share, $6.76. Now the earnings per share is $3 per share. Revenue, that's how much money the company has coming in for each share they have out. $6.76. Hold on, it gets worse. Oh, look at this. This went up. Book value per share, $4.11. So if Nvidia sold off everything they owned, sold everything off, and paid you all your money back, guess how much you're getting? $4.11. You're paying $175 for a stock that's only worth $4.11 in hard asset value. Think about that. You think it's wonderful? Hold on. Check this company out. Okay, General Motors. They've been in business for over 100 years. Revenue per share, $182 for each and every share they have out there. $182 comes in as revenue. Well, what's the share price? Well, the share price is $58. Not $170. This is $58. And look at the revenue. $182 per share. Hold on, it gets better. Book value, $69.35. So you're paying $58 for a $69 stock. The company is worth $69 per share. You're paying $58 per share. But no. You want to pay $175 for a $4 per share stock. That makes no sense to me whatsoever. And the dividend and the rate of return, the yield on an Nvidia, 0.02. It's not, how do you even count that low? What exactly is 0.02? It's 4 cents. 4 cents per share is what you're, no, I don't like Nvidia. Terribly sorry. It's a, what do you call that? It's a growth stock. They take all the profits, put it back into the stock, overinflated as hell, because it's only worth $4.11 per share. You can bitch, moan, complain all you want. No, but it's going for it. I really don't care how much it's selling for. What are the actual factual numbers? How much do they owe? How much do they own? What is the revenue coming in? What is the company actually worth? After all the T's are crossed and all the I's are dotted and all the punctuation is corrected in what do they call that? Chat GPT goes through it and takes a look. Yep, $4.11 a share, Nvidia. And you're paying $175 per share. General Motors, it's worth $69 a share, and you're paying $58. And they have a higher dividend. And they've been in business for over 100 years. I can't imagine a world where General Motors just disappears. That's what I say. No way to lose. Now, Nvidia, no. They just popped up recently. And there is competition to knock them off. Because there are a lot of people, a lot of companies trying to create the next beautiful, wonderful microchip. They will eventually. Because Taiwan Semiconductors, TSM, that was the big boy on the block. Well, now they're getting bumped off by Nvidia and some of the other companies. Well, you think there's some guy in his garage saying, hey, I think I got this figured out. And eventually, he's going to dwarf Nvidia, and Nvidia is just going to disappear. But General Motors has been around for over 100 years. 100 years. It ain't going anywhere. Nvidia, I'm not so sure. Especially not $175 and 0.02%. What the hell are you thinking? Seriously. You're investing $175 for 1 penny dividend. I'm not going to bother. Anyway, let's go back to... Do you remember I told you before? Make sure the company is profitable before you invest in it. There's always someone who's going to come up with something that does not make sense. To me, that doesn't make sense. I'm not going to buy a company, a stock that's only worth $4.11 and pay $175 for it and have a dividend of 1 penny. That just doesn't work. Dylan wants to take a look at Procter & Gamble. Now, Dylan, Procter & Gamble is what they call a dividend king, which means they've been around for over 100 years. They have over 5 decades of consistent increasing profitability. Definitely not 1 penny. Definitely. All right, PG, Procter & Gamble. Interesting. Okay, we see the high. We see the low. We see where it was. See where it is. See the movement. Up, down. Bottom's right here. Now she's shooting up. Is it the right time to jump in? I'm going to say no to Procter & Gamble for this week, only because this right here. Right? Up, oops, up. Now she's coming down. What's happening here, though? Is this the start of the turnaround? It could be. So why don't we take it and put it on the list for us to take a look at next week? Procter & Gamble next week. Wow, we got like 30 stocks to take a look at next week. Uh-oh. Nana, how are you today? This is financial advice. Terribly sorry, Nana. I'm going to disagree with you. XRP, XLM, and XCDC. Yeah, those aren't dividend stocks, kiddo. I'm going to say no to all of those. You're new here. All right. Wow, I missed all these questions. Questions. All right, Odom, where is the best place to find weekly option stocks older than 20 years? I don't know how to do that. CBOE.com. Chicago Board Options Exchange. CBOE.com. Tells you where all the weekly option stocks are. Oh, no, it's a boot loop. I have no idea what the boot loop is. Creative Journey. Yes. Let the money work for us while we are asleep. Yeah, I agree with you there, Creative Journey. Misty Moon Sweet, how are you today? Neforne. Okay. It's working now, sort of. Just don't touch it. Okay. All right, we already did that one for I Love Cecily and Cutie. Creative Journey, thank you. We have to help tapping the screen. Thank you. Creative Journey, getting value. Please tap the screen. Thank you. Quanfan, good evening. Hold on here. I'm losing. Yeah. Okay. You feel the Fed will be hawkish, right? Hawkish? Hawkish? What the heck does hawkish mean? Volatility is low, equities are overextended, and bonds are selling off. Okay. You do realize, okay, Prophetic Muse, interesting name. Now, I'm not 100% sure if you realize this. Procter & Gamble has been in business for over 100 years. 100 years, 1800s, 100 years they've been in business. They have increased their profitability for over 5 decades. That's over 50 years. That's a half a century. Do you honestly think that whatever's happening in the economy now didn't happen already? I mean, we've seen World War I, World War II, Korea, Vietnam, all the crap over in the Gulf, the Afghanistan, all that crap. We've seen the stock market crash as 29, 87, 2000, 2008, 2021, 2025. We've seen them all. And they're still profitable. So just because low equities are overextended and bonds are selling off, you think that didn't happen over the last 100 years? Yet this company and a whole bunch of others have consistently been profitable, even through all that. Look at this. Hollywood's in the house. Hollywood, what's going on, brother? So, prophetic muse. Just keep that in mind. The companies that I like, okay, they've been some of them have been successful for over 100 years. And I'm perfectly okay investing in them because I honestly don't think Coca-Cola is going to disappear, regardless of what happens in the equity market, regardless of what happens in the bond market. They're going to continue to make Coca-Cola. Well, maybe if the shit hits the fan, I might not get 1%. I might get 0.5%. But you know what? 0.5% is 26% per year. Well, that's pretty good in a down market. All right, so let's keep on going.
Hey, James, a few of us want you to look at Mara. When you get a sec.
Here we go. Thank you, Eric. Just take a look at Mara. I wish this was my grandpa and soak up info up like a sponge. I'm going to take that as a compliment. Thank you. However, my grandchild's only 5 years old. Now, some of you have seen him. He comes on once in a while. He's a ball of energy. But he tuckers out like at 10 or 15 minutes. 10 or 15 minutes, he goes in the other room. He wants to watch Super Duper Bunny League. Whatever. All right, so we're going to take a look at Mara. Ooh, what's going on with Mara? Now, I do own some Mara. Here we go. Ooh, check that out. I gave you the ooh. Ooh. All right, so let's take a look. Here's the high, the low. Where was it? Where is it? Look at this. Up, down, up, down, up. That's definite move. I mean, argue all you want. That's the high, and that's the low. That's where it was. This is where it is. Look, up, down, up. It's in an upward trend. Great. What's the numbers? 1753, 1750, 59. That's just a little bit less than 4%. I don't know. Anyway, let's check it out. A year ago, 1590. High of the year, back at the end of November of last year, 30. Okay, I got to slow down on this one. You ready? 30.37. The high of the year, 30.37. Now, why did I pause on that? Because I want to show you something, because I'm not 100% sure if anybody showed you this before. Because it's very important. You know, I say a lot of things are important, but this one's kind of is. It's kind of up there on the important scale. 30.37. The bottom, 10. That's a 60% drop. 60% drop. Now, remember why I say rule number 2, never sell at a loss. If you buy it $30 and it drops down here to 10, and you decide to save it at 10, I don't want to lose any more. I'm going to sell again at 10. It's your own damn fault. Never, ever, ever sell at a loss. If the company's consistently profitable and they have weekly options, okay? If you are in your 60s, 70s, and 80s and you don't have a lot of time, well, that's one thing. Okay, how much time do you have until you check out? I'm thinking 10, 20 years. I'm thinking 20, 30 years for me. So I'm 61. I like to hit somewhere in my 80s, 90s. I'm shooting for 113. I don't think so, because aches and pains are adding up every day. You know, as you get older, you wake up and you say, oh, what the hell did that come from? Okay, and then you go through the day. Remember, you ever hear an old person get up and, they're counting all the injuries throughout the years. So once you injure yourself, that stays with you for the rest of your life. See, when I played soccer in high school, I got an injury. And every once in a while, it flares up. I said, damn it, that thing was from 1981. And it still reminds me of that stupid thing that I did. All right, so anyway, let's take a look at the numbers. Bottom of the year, April, 967. That's below 10. But take a look. From 967, the bottom of the year, shoots up nicely to 21. So it goes from 967 to 21. That's 100% growth. Okay, yeah, it dropped down 60%, but then it turned around, jumped up 100. So now I go from this area to here, back down. Now she's turning around and going back up again. Because that's what stocks do. They go up, they go down. They go up, they go down. If you sell for less than what you paid for it, it is your own damn fault for taking the loss. My rules are simple. For my 9-year-old daughter, never buy something that's not on the list. That was for her. If it's not on the list, no, don't buy it. That's it. She has no clue what all the other companies are, what the hell they do. Because it's not on her list. It's not in her little orbit. Okay? So if you never look at a stock that doesn't fit, you have no idea it even exists. Some companies I have no clue of. But I don't care because they don't fit. You can go to the best cobbler and look at the best pair of shoes in the world. If they don't fit, that's a no. It's that simple. All right, last 90 days. High, low, where was it? Where is it? Look at this. Up, down, up. Come on, it's not that difficult. A 5-year-old could figure that one out. Last 30 days. Now, high, low, where was it? Where is it? Down, up, down, up. It doesn't look that good here because it looks like you should be selling at 1753, not buying. But if you back up and look at the last 90 days, okay, this is the last 90 days. It's still got all this space to go up here. If you're okay with that. So let's see what the 1750s actually look like. If and only if you're okay with buying it at 1750. Now, I already own it, so it's not an issue for me. But if it was, I probably wouldn't. But that's me because the last 30 days, here's your bottom here, and then she shoots up. 1450 to 17 is $3. Well, $3 on a $14 stock, that's over 20% from here to here. So anytime it jumps up 20%, yeah, there's going to be profit taking. But in the long run, okay, she'll go up here, she'll pull back a little bit, then she'll keep going up because you got this high here it's going to come up with. Eventually. But as she jumps, see, going from here, which was 1450 to 1650, which is $2, which is around 12% maybe, between here and here. Then you said profit taken here to here, that's 20%, yeah. Profit taken back down, back up. They do the same things over and over and over again. So let's see what the 1750 looks like. Get rid of this. Change this to that. 1750 right there. One contract. La, 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 la. At the market. Off to the races we go. Here's Johnny. Buy one covered call Mara 100. 19 September 25. That's coming Friday. 1750 call option against the stock at the market to open. Here's the profit 54. The investment 1700. Calculator. Come out wherever you are. Ollie oxen free. That was a game we played in the 70s. Ollie oxen free. Wait, $54 maximum profit. Divided by the investment, 1696 comes to a grand total of 3.1%. If you like Mara. Never, ever, ever buy something you don't want to hold long term. That's rule number 1. Rule number 2, never sell a loss. If I buy it at 1753, I'm never going to sell it less than 1750. All right, see, do you hear what I just said? Never sell it at a loss? Yeah, I would sell it at a loss. If I buy it at 1753 and I sell it at 1750, technically that is a loss. But not really because I'm collecting this, the premium. See, the premium brings my sale price up over 1750 because I'm collecting the premium and I'm selling it. So you add those two together. Well, what's the difference? Well, that's my profit. Okay, profit's profit no matter which way you look at it. I tell my kids all the time, profits are better than wages because wages keep you stuck in a position that you can't break out of. But a profit can be as high as you want it or as low as you want it. But profits are better than wages. All right, let's grab the chair again and let's see what other questions we got because my knees are bothering me. I'm getting old. I admit it, and I hate admitting it. All right. Let's get out of this. Get out of this. Get out of that. Back to this right there. Back to the beginning. Here we go. More questions. Questions. All right, we got Dylan over here. All righty. Prophetic Muse. Inverse Instruments. Thank you. Charlie died 12:23. Read John 12:23. Blah, blah, blah. Okay, Gonzalez, how are you doing? So you're not holding on to 142.93 and selling it for 70 or 80 if it drops. Oh, hell no. No. I don't sell at a loss. If I bought it at 142.93 and it drops to 70 or 80, no, I wouldn't sell it. I would keep it. I'd keep writing covered calls for it until it goes back up again. Do you keep your options open? Absolutely. Why wouldn't I? Nikki over here. Okay, got it. Showcase a portfolio. Bev, how are you today? Invest in XRP. No, sorry, kiddo. All right, I don't take kindly to that. All right, well, I'm new here. All right, that's fine. Okay, all righty. You ready, Brian? Thank you. Good breakdown. Thank you. Glad you appreciate. What stock is that? That is Mara. What stock is this? I did that one. I love Sealy and Cutie FX. Okay. Do you also sell cash secured puts? Yes, I do. Fill my Hooters. Phil, that's kind of inappropriate, but okay. ULTY, again, another person. Phil, I'm going to pick on you just for a little bit, if you don't mind. When I say never, now this is just my advice. Okay, it's not really advice. It's just something that I live by. And that is point blank. I never invest in anything that is not profitable. ULTY. ULTY. Here we go. Wow, that looks interesting. Let's take a look at the historical data for ULTY. Because the summary, it just doesn't make any sense. The yield, 129%. Phil, explain to me. Okay, see if you can explain this to me. If I make $100 million a year as a profit, how the hell am I going to be able to pay out $129 million? Because it says they're paying out 129% of their profits. How the hell can you do that? I'm kind of curious. Prices, dividends only. Let's take a look at all of the dividends. Oh, that's why the company's a year and a half old. All right. Hold on for a second, Phil. You like this thing so much, it's not even 2 years old. Okay, I don't see. When I said, that's my fault, because I said 2 decades. And I'm assuming you think a decade is a year. No, a decade is 10 years. So when I say 2 decades, it's 10 years, not 2 years. 10 years, not 10 months, not 20 months, 10 years. Okay, so ULTY, let's take a look. 106, 141, that's higher. 127, that's down. 113, that's down. 99, that's down. 78, that's down. So this company is losing money. And you think it's good. Do you even check out the numbers? 106, 141, that's higher. 141 to 127, that's lower. 127 to 113, that's lower. 113 to 99, that's lower. 99 to 78, that's lower. Look it up here, 57, even lower still. And you think this is good? Nope, I don't. Number one, I don't do companies that are 2 years old. Why? Most companies don't get past 3 to 5 years. 1 in 100 will actually get to 10 years. 1 in 1,000 will get to 50 or 25 years. Okay, so why are you putting your money into a company that's only 2 years old? Especially 106, 141, 127, 113, 99, 78, 98, 82, 80. Yeah, the numbers are horrible. But hey, it's your money. It's your thing. Do what you want to do. I'm not going to tell you what the hell to do. All right, anyway. Anyway, all the yield max stocks are like this. Less than 2 years old, less than 3 years old. The numbers are unsustainable. There is no possible way on God's green earth you can pay out 129% unless you're taking the money from the new investors to pay the old investors. If I make 100 million, there's no possible way I can pay out 129 million. It's great until it stops, but it will stop. And where are you going to be when it does? All right. Next. Dun, 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 bum, bum, bum. Okay. All right, there we go. All righty. I really need to. This is honestly the first time I'm able to understand how this all works. Well, you're new here. Okay, I've been doing this for over 15 years. I get videos. I get 1,200 videos. That's a lot. You go to YouTube, I get 1,200 videos there. All saying the exact same thing. Okay? But, you know, Starbucks, Felix. How are you doing, Felix? Let's go take a look at Starbuckies. I like Starbuckies. I do. Let's take a look. S-Bucks. Oh, did you see that, Felix? Check this out. You ready? The high, the low, where was it? We'll go. Okay. Up, down, up, down, up, down, up. Look at this. She's turning around right there. Right there. We've been watching this thing for the past couple of weeks. Okay. Now, I can't look at everything. That's why, I asked, because I have a morning trading group. People come in and we all help each other. And sometimes people can see stuff that I don't see. Like, I didn't know Starbucks looked this good this week. I knew it was dropping. So I knew this was happening. I just didn't know it hit the bottom a couple of days ago. So let's zoom in a little closer. But before we do, is it going to be financially feasible? Now, tomorrow's Wednesday, so we have 3 days left for this week. Might not look good for this week, but for next week, it might look good. 84.37. Well, the 85s for this week's going for 92. Well, hell yeah, I'll do that one. Let's find out. Glasses so that I can see the big screen. You believe that the screen is like a 60-inch screen, and I still need the glasses to see it. Don't get old. It's no fun. People think the golden years are great. No, they're not. Enjoy your life while you're young, because the older you get, the less you can do. Now, I'm an anomaly. See, I still go out and play soccer with the guys in the 20s and 30s. I can keep up with most of them for almost the whole day. Not the whole day. I'm 61. They're in their 20s and 30s. I still give them a run for the money, though. A year ago, 97.09, the high of the year. Well, that was the beginning of March, 117. And then we got our bottom in the end of April, 75.78. Look at the move from there. Love that. Look at this. Here's the high. She drops. Bottom. She turns around. This is what I'm looking at right there. That looks pretty. Last 30 days. Let's do this. Here's your last 30 days. 30-day high, 30-day bottom. Where was it? Where is it? Look at this. Down, up, down, up. What do you think? Well, let's check this thing out at 85. Why not? Okay, get rid of this. Covered call, there it is, the 85 right there. One contract, right there. Market price right there, and here we go. Here's Johnny by one. Covered call, Starbucks 100s. 19 September, that's this coming Friday, 3 days away. The $85 call option against the stock at the market to open. Here's my profit, 158. It's costing me $8,000. Let's see what that is. Come out, wherever you are. Calculator. Here we go. Here we go. Here we go. Yo. Here we go. Okay, so profit 158. 158 divided by 83.42. 1.89 for 3 days. Now, questions. Number one, does that make sense? If I'm buying it at the current price, 84.37, I'm going to enter into a contract, a covered call, selling it to somebody else at 85. And for the privilege of buying it from me, they're going to pay me $158 for each and every contract I have. Think of it as a vending machine. The vending machine is costing me $8,300. And this week, it's bringing me in 158. Well, 158, that's 1.9%. Well, that's pretty damn good if you think about it. Because if 1% per week is 50% per year, 1.89%, well, that's pretty much 100% per year. That's like doubling your money in 1 year. So again, it's the same 5 questions. Does it make sense? Do I like this company? Am I willing to buy it, hold it, never ever sell it until it hits my target? Well, my target, 84.37, is going to be 85. I refuse to sell at a loss. Anyway, next. Okay, let's get, I'm going to write that one down too, 1.9 for Starbuckies. Starbuckies. All right. Next question. Which ticker are you using? SBUX at Starbucks. All right. 38. We got 20 minutes left. I'm pretty sure tomorrow night I'm going to have a different setup. Okay? Because tomorrow night I'm going to be in Chicago and I won't have my screen, and I'm pretty sure I'm not going to have all 6 of my my phones with me, so I can't broadcast all of them. I'm only going for, 4 or 5 days? But I'll still be broadcasting. I don't know how many channels I'll be broadcasting on tomorrow night, though. More than likely 3 or 4, but not all 9. Richie, Brian, what's going on? He is good at breaking it all down. Thank you there, Mr. Brian. I'm going to take that as a compliment. Abdul, what's happening? Cheryl Tate. How you doing there, Cheryl Tate? Leon, UPS. Oh, wait a minute. We looked at FedEx earlier. UPS. Okay, what's UPS looking like? Hold on a second. The Ups Dudes, UPS. Ooh, nice. Take a look at that. Okay. Let's go to the 30-day right there. Here's 30 days. Look, 30-day high, 30-day bottom, and she's definitely going up. That is the 85.20. The 85 is 125. That's over 1% if you like UPS. Brenda, what do I think of Altria? I love Altria. M-O, Altria. Not this week, kiddo. Maybe in a couple of weeks. Okay. Top, bottom. Okay, could this be the bottom? Got a gap down. That gap's going to fill eventually. When she fills, that looked nice, right? Well, we're currently at 64.81. What's this 65 going for? 40 cents for this week. Not for this week. Okay, see right here, it's 65. Hold on, let me get up for this one. Okay, 64.81. The 65 is going for 40 cents. $65 stock is selling at 40 cents per share. That's not 1%. 65 cents on a $65 stock, that's 1%. So what does next week look like? The 26th of September. Okay, this 65 is going for 73. Well, that one makes more sense. Because remember, we got 3 days left. Wednesday, Thursday, Friday. But next week, see this little number here? 3 days left. Well, next week's the 26th September. 10 days. Okay, if this week doesn't look good, look at next week. Maybe next week looks better. Is this Goodman Saul? Yes, it is. Why argue? You know, if that's what you want to believe, you believe that. All right, what do we have over here? Brandon, Crypto Weewo, Chi Town Chill. All right. DJ, what's going on? David Newhomes, Maria Ruggiero, Wedge Master, Jason Weiss, how you doing? Knowledge is power, thank you. Nice counter answer, man. I have no idea. Oh, did you like that one, Overlord? Hey, there's absolutely not, Overlord, there's absolutely nothing wrong with wanting capital growth. Nothing. Okay, but I'm trying to do you a favor, brother. You're in the wrong place. Okay, you're looking for capital growth. That's not what I'm looking for. I'm looking for cash flow. Okay, you want cash flow? Fine. I'll show you my strategy. It may not be the greatest one in the world, but I created it for a 9-year-old, so it is simple. Okay, it's simple, safe, predictable, consistent. That's what my 9-year-old daughter needed. So, you know what? It works so good. It's like, all right, I'm not even going to bother with everything else. I'm just going to do this myself. Now, I do a few other trades, not a lot. Martel, yeah, you my brother. You look very well. Thank you, Martel. Overlord, what impact will Trump's tariff will create on the stock market? Don't know, don't care. How do you like that for an answer? Okay, if you understand anything, no, I told you I don't want to do politics. Because if you understand anything about tariffs, okay, so if I have a cup and I sell this in Europe and they put a 10% tax on it, okay, fine, I understand that. Now, if they take their cup, looks very similar to mine, and they sell it to here, well, they should have the exact same tariff, 10%. You charge us 10%, fine, we'll charge you 10%. Why is everybody getting their panties in a twist? It is what it is. It's called reciprocal tariffs. You charge us 10, we charge you 10. You charge us 5, fine, we charge you 5. Okay? Before 1913, the country ran 100% on tariffs because the greatest, you can argue all you want. You can, and I really don't care if you want to argue. The biggest economy in the world is here in the United States. It's the biggest economy, and we have been taken advantage of for decades. Let's just stop this, okay? No politics, please. All right. Viral videos. You look like old Christian Bale. Thank you. The Dow Jones is going to fall, and it's going to be fine, swell day. Okay. I'm not quite sure what that has to do with what we're doing. What do you mean you're short on Macy's? Different than being long. How about GoPro? They haven't been around. They're not consistently profitable. Do they have dividends? Okay. Joey Kent, can you explain a little about what happens at the end of the week when your call expires? What happened? All right, Joey, here's the thing. Altria is at 64.81. If I buy Altria at 64.81, more than likely I'm going to sell somebody the 85. That means they have the right to buy it from me at 85. So come Friday afternoon, one or two things are going to happen. Number one, if it's over 85, whoever bought that option is going to take it away from me. I get all my money back at 65, 64.81 plus whatever the difference is between the 65 and the 64.81. Was that another 19 cents per share? It's always per share. So if I get 500 shares, it's 19 cents times 500. Okay? Now, if it is below 65, I will keep the stock. I will keep the premium. And then the following Monday, I will do the same thing over again. Sell it to someone else at 65. I will do that every single week until my target is hit. What's my target? 65. I'm buying it at 64.81. I refuse to sell it for less. So if I buy it at 64.81, I want to get 65 for it. Plain and simple. It may hit 65 this week. It may not. It may never hit 65. But you want to know what? Altria has been in business for over 100 years. They have increased their profits for more than 5 decades. They are a dividend king. It's a no-brainer for me. I see that, great. The numbers work, great. I'm buying it. If it's the right time. Okay? Top's there, bottom's here. It's not the right time. Now, if I want to gamble and think that this is the bottom and tomorrow's going to be higher, yeah, I'd do that. But I don't want to do that because I don't try to find the bottoms. Because it's a hit and miss. You can't always find the bottom. You need something to compare it to, and that's tomorrow. What is the stock going to do tomorrow? Is it going to be higher or lower than today? You get three choices. It's going to be higher than today, it's going to be lower than today, or it's going to be the exact same. That's it. There's no fourth option. Higher, lower, or the same. So Joey, I hope you understand that. What's the best stock for options? Dividend Kings, Dividend Aristocrats, Dividend Champions. Buy whatever will be bailed out when the taxpayers if the market crashes. I say, Drew, I said we don't want to do politics, but you brought it up. You do realize the next bailout is not going to be a bailout because the first bailout took the interest rate from here down to here. The next bailout took the interest rate from here to here. And the last interest rate the last cut brought it from here down to zero. Do you remember 0% interest rate? Well, what's next? Negative numbers. You can't have negative numbers because they're calling it a bail-in. So the next time it comes, it's coming from your 401ks. Okay? It's the deposits in the banks is going to pay for the next bailout. You don't believe me? Read the fine print. Read the fine print, your 401k. It's in there. Not a lot of people know about it. Actually, almost nobody knows about it. Let's talk about Lowe's. Okay, we already looked at Lowe's. It's a no for this week. Sorry. It's a hot time to buy from good people at Lockheed Martin, LMT. Lockheed Martin, LMT. I'm not 100% agreeing with you. Okay, the high's up here. I'm gonna need glasses for this one. The high of the year is 619. Bottom of the year is a 409. So 619 to 409. It's a $200 drop. $200 drop on a $600 stock is a 30% drop. So that's a 30% drop. Okay, 409 is the bottom. Right there. Now she jumped from 409 to 475. Okay, take a look at that move. From here, how high do you think it's going to go before they take profits? We'll do the numbers. The bottom's 410 to 470. That's 15%. That is a 15% increase. Do you really think 15% people aren't going to take profits and that thing's going to pull back? I don't ever buy at the 30-day high. That's just, hey, cool. I missed that one. That's all that is for me. Okay, there's 10,700 different companies. This is just one. I missed it. Well, I'll put it on the list in 2 or 3 weeks when it comes back down again. But I don't buy stocks over $300, so I really don't care about that one. Let's keep on keeping on. Jason, how you doing? Jaling Jang, how are you? Berlita, how are you? Islander Maldana. Calvin, Habits. Story Black, okay. The Ecom Lab, how you doing? Phil, Christopher, Frederick, JC from AC. Hey, Dr. Dev's back. How you doing, Dr. Dev? Much love, good. Squid Duke, interesting. Edgemaster, what's my thoughts on Rich Tech Robotics? Edgemaster, the exact same as they were last night when you asked me last night. No, company's not old enough, has not been around long enough. Okay, JD next 12 hours. I have no idea what that means, JD next 12 hours, but okay. Christopher, how you doing? Dr. Deb, hello. John E. Vist, how you doing? Mark B. Bev, any stock you recommend? Dividend Kings, Dividend Aristocrats, blah, blah, blah. Finally, an intelligent TikToker. Hey, Calvin, thank you for that, I think. Merrill Theater. Well, hello. Colin, UNH, United Health Group. Now, we talked about this recently, okay? We're up here in the 600s, drops down here to the 250s, big drop. Now she shoots up, pulls back twice. Shot, pulled back twice. Here's the bottom. What do you think? Bottom's here, shoots up, pulls back. Shoots up, pulls back. Not the time to buy. If you like UNH, just keep your eye on it. When she finishes coming down, finds a bottom and turns around, goes back up again. That's the time to buy. If you like UNH, it's not that difficult. Private defense sector. Okay. This is a math. Okay, Christian, thank you. Drew. FedEx has too much socially necessary labor production that could be leveraged against those of us who are interested in surplus value. Interesting take on it. Thank you, Drew. I look at it, the company's the company's profitable. They're at a high, they're at a bottom, they're turning around and going back up again. I try not to get into the complex crap. I try not to get dragged into the politics of the companies. I don't. Because if the company's running the company the way the company's supposed to be running the company, they're supposed to be profitable year after year after year. I mean, that's the purpose of a company in the first place, to contribute to society by serving a product or a service. Well, UPS's service is delivering packages on time at an efficient price. And FedEx is the same way. So you have to take that in consideration. FedEx earnings is Thursday. Yep, we all know that. We actually talked about that this morning. Do the numbers look okay? Are you okay with the fact they have the earnings coming up? Are you okay with the fact that they have the dividends coming up? Because it does affect the stock price. But here's the thing. Rule 1 is never buy something you don't want to own. Manny, thank you for that, Manny. Never buy something you don't want to own. So if you're concerned about the earnings coming up, wait until after. Stock market's been around for 400 years. It ain't going to change just because you don't like the fact that earnings are coming up. There are other people who don't really care. I'm one of them. I don't care. I like FedEx. If it's up, down, and it's the right time to buy, I will buy it regardless if the dividend's coming up or the earnings coming up. I just applied it to FedEx, okay? FedEx earnings coming up. Got that one. My broker said margin is safer than my own money. And you actually believe that shit? No. See, margin is great if you know how to use it. So if you put in, say, 20 grand, your broker is going to put in 20 grand. Now, if the stock goes up $1, you make $2. It's great. But if the stock goes down $1, you lose $2. So it amplifies whatever you're doing. And if the stock drops 50%, guess what? You're going to get a phone call. It's going to sound something like this. Josh, you're done. We're liquidating your position to cover your your losses. Okay, so if you put in 20 grand, your broker puts in 20 grand, and you buy FedEx, and it drops 50%. Well, half that money was yours, half was your broker's. And I can guarantee you 100% certainty, because it happened to me more than once. The market maker, the broker, will not lose a single penny. Never, ever, ever. Stock goes down, you lose your money first. Then, and only then, will the broker lose money. And the broker won't lose money because he will shut you down at a 50% loss. Says, sorry, buddy, you're done playing. What do I think about ABTC? I've never heard of it. ABTC. Hell no. How's that? That was quick, wasn't it? What are you using for charting? Think or Swim. It's owned by Charles Schwab. It's a trading platform. That's all it is. Oh, Parisian man wants to take a look at Oracle. ORCL. Oracle's on my list. Not this week it ain't, though. Okay, look at that big gap right there. That gap has a tendency to fill. Yeah. Okay. Low here, shoots up, bound up. Yeah, that's going to fill eventually. I don't want to get involved in that. I want to wait until all that disappears. What do we have? Hugo Lino Contreras. ¿Qué pasa, amigo? ¿Cómo estás? ¿Estás bien? Thoughts on Tesla? TSLA. Now, Tesla doesn't have dividends, so I don't really do Tesla. And why are we looking at it? Look at this. It's not the time to buy it, brother. That's the time to sell. When a stock jumps up like that, you say, thank you very much. I'm going to take my marbles and go play in the next sandbox. Why hang around? Okay? Because the stock goes from 330, jumps up to 420. That's a $90 increase. You don't think people are going to take those profits and run away? What's your opinion on FPSL? Uh-oh. Yo, do too. You do too. Oh, you do too. Okay. FPSL. What the hell is that? FPSL. FPSL. Okay. When it says we cannot find the symbol, that means it's not a stock here in the U.S. Sorry. TSM, Taiwan Semiconductors. Hell no. It's like, don't you guys even read what's going on with the stocks you like? That is not an opportunity for buying. Okay? When the stock jumps like that, it went from here. Okay, where is it? Need the glasses for this one. From 130 to 260, that's a 100% increase. Why the hell are we looking at it? That's not a buying opportunity. That's an observation. So, oh, look what you missed. That's what that is. Show me something that the other people can take advantage of. Not, oh, look what I did and you missed out on. That's just rubbing salt into people's wounds. UPS, where I looked at. Sahan Syed, how are you doing today? Ophelia, how are you? Kirk, how's it going? Got UNH, good for you. Doberman, do you make a decision? Do you make a decent living off of this weekly? Yes, I do. Think about it this way. I'm 61, okay? Now, let's say, hypothetically, I have $100,000 in my account. Now, 61, all right? I've been working for 50 years. Okay, 1973, 74 was my first job. Okay, every penny I've saved along the way, I'm getting 1%. Now, 100,000, 1% of 100,000 is $1,000 a week. Okay? That's 1 hour a week. That's $1,000 an hour. Okay, so if I have 200,000, that's $2,000 a week, or $8,000 a month. Okay, so I'm not looking to buy a Lamborghini, Rolls Royce. I got a piece of crap 2000, a 2000 Dodge van, because that's what I want. I was brought up dirt poor. Terribly sorry. It does, you have a Lamborghini, a Corvette, Maserati. I got an old Dodge van. I can guarantee you 100%. I'll get in, turn the key, and it'll take me to point A to point B and back again. And I also guarantee you, I can put plywood on the top of my van. I got a bed in the back. I got, a closet, a bathroom, and all my tools. So I can go wherever I want and do whatever I want to do. I was a handyman for years. So I went places and I did stuff. So yeah, well, I have like 4 or 5 vehicles, but the one I've had the longest is my 2000 Dodge van. I paid $300. $300 for it 8 years ago. And I've driven it back and forth from Maine to Florida about 6 times, towing a boat. It's paid for. It gets 14 miles a gallon, which is crappy, but it's paid for. Get in, turn the key in, and go. Okay, $600 for a brand new set of tires. I paid more for the tires than I did for the van. I don't need, a brand new Lamborghini. I don't need a Maserati. I've had Porsches before. Okay, I've had a Lotus before. I had Mercedes. I've had Corvettes. I've had all those crap. It's just a car. It gets you to point A to point B. What's the big deal? You ain't taking it with you. Think about it. You ain't taking it with you. I'm 61. I've never, ever, ever seen a hearse go by with a U-Haul. Basically, that means you ain't taking it with you. Holy crap, it's past 11. We're done. We're done. All right, so let me see if I can go through these last questions. We'll be done. I make a distant living. Yes, I do. Chuck, how you doing? Aaron, good beans. Can you look at Goon? Ham sandwich. We'll take a look at it tomorrow. Okay. Simone's in the house. Justin, what's going on? The intensity. How much principal? You have to be more specific on that question. Rafine, thank you plenty. How do you screen for dividend stocks? Google. Seriously, go to Google. Dividend Kings List 2025. Hit enter and it'll give you the list. Dividend Aristocrats List 2025. How much principal are you working with? I got 7 different accounts. Okay? All you have to be concerned of, okay, whatever you're working with, my goal for me is 1% a week. So if I have $1 million, 1% of $1 million is $10,000. If I have $10,000, 1% is $100. 1% is 1%, no matter how you look at it. Never mind. HIG is monthly options. Thank you. Ant the Man. Thank you. Bridget, GPIX. Look at it tomorrow. How much principal? Okay, I'm going to answer that. What's an option? An option is the right, but not the obligation. I mean, you can if you want, but you don't have to. You have your option. Huh? Do I want to? Oh, why not? So you have the option to do it, or you have the option to not do it. That's basically what an option is. How much principal are you working with? I'm not going to answer that question. CLM. CLM's a no. It's a monthly. QS. I'd like to hear your thoughts on micro cloud hologram. Never heard of it. Ooh, Strong Mike, Texas. Bitto, love Bitto. QS, QQM, no. Trump wanting to eliminate quarterly earning report. Hey, okay. Bitto, blah, 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 blah. TNA. Please, good. Okay, next week. Strong Mike, Texas, 1% a week. Absolutely. I need a Bentley because I'm not taking it with me. Well, why the hell do you need a Bentley? Oh, Rich. Come on, Rich. You just bought yourself, wait a minute, you just bought your wife a brand new Porsche. So why do you need a Bentley? Well, I know, to tow the Porsche around when it breaks down. You ain't taking your money either. No, I ain't. I'm leaving mine for my kids and my grandkids. Book to recommend, please. Oh, book to recommend. I would say, hold on. Wall Street Money Machine by Wade Cook. Which of your books do I recommend? Oh, book number 14, which I haven't uploaded it yet. But my sons are both going to join the business. It's not really a business, but it's just a hobby. And they're going to help me out. Target, Jen Penka. I like Target. So let's come over here. Oracle, we looked at that one. Yep. Bascom, how are you doing today? Kingsman, how are you? James Strange. DeWitt, how are you? Kingsman, great content, thank you. Andy, what's going on? Calaman Bluestone, I know you don't like stocks above 250, but do you have a bottom price? I have to say around $3. Is trading gambling like betting on win or lose? Sailor, it depends on how you play the game. It is a game. It's just like Monopoly. 4 greenhouses, 1 red hotel. Where do I get book 14? Jojo, I haven't uploaded it yet. I will eventually put all the books on my website. You can find that in the top left corner. Would a massive cut in Fed deficit cause a recession? Do you hear what you just said? Because a massive cut in the Fed deficit cause a recession. You mean stop the politicians from spending our money needlessly? Is that what you mean? Because that's a massive cut in the deficit. Yeah, I saw a report the other day. It was very disturbing. Very disturbing. Elon Musk was a failure because he came up with so many things to cut from the budget to save us tons of money. And the Democrats sued him. Can you imagine that? He opened up the checkbook and said, "You're wasting money." Well, good. We're going to sue you. I can't fucking believe that shit. And to make matters worse, the Republicans aren't any better, because all the what do you call it? All the suggestions that Musk came up with, not a single one has been acted upon in Congress. So the Republicans are just as bad as the Democrats. And don't get me started, please. I ask you, like, take on Trump trying to change earning report from quarterly to every 6 months. What's wrong with that? Think about it. What's wrong with it? Okay, FDR, when he created the SEC, he required all companies to have an annual report, not quarterly, annual. Why did they go to quarterly? I have no idea. But now he wants to go 6 months. Yeah, get rid of some of the paperwork. Can you explain a little about the end of the week? We already did that one. Zombie guy, how are you today? Big C, what's going on? People forget it's split 10 times. Okay, I have no idea which one we're talking about, but that's okay. Zombie guy, Nvidia, what were you thinking? Yeah, long sprinkler guy. Don't get me wrong, if you want a stock that's capital growth, there you go. But for cash flow, no, it doesn't fit. Crazy man, okay, just wondering, thanks. Lightning bolt, thank you, Drizzle. FedEx, got it. How about VT Sachs? Never heard of it. Take me tomorrow. QuantumScape, check me tomorrow. You haven't seen the new woke Democrat. Oh, I don't want to see them either. Lemonade, how are you doing today? Okay, we already got that question. SBSW just quit paying dividends. I know, once again, not your style, but I like watching your view. Thank you. I appreciate that. No dividends, no thank you. Plain simple. Just wondering, thanks. Target, when would you get in? Okay, Ruby, ask me tomorrow night because we're past 11 o'clock. Sonia, thank you for the advice. It's not advice, just observation. New here. Could you look at CMG? That's Chipotle. Ask me tomorrow night. I'm going to be here tomorrow night too. Uh-oh. P. Everly, 13. Dude, you've been here often enough. Why are you doing? You've been here before. I'm good with names. Okay, you show up often enough, I'll be able to pick you out in a crowd. And you've been here before. You know the way I feel about Tesla. Why are you asking? He ain't lying. There you go. David, how you doing today? Shark, what's going on? Are we buying Starbucks 100 leaps for January 27? I don't buy options. Okay, I only sell them. 80% of all options expire worthless. And if you buy the $100 Starbucks option, how far does it have to go up just for you to break even? And do you think the stock can actually achieve that in that amount of time? Which comment are you looking at? The real Vishal. I'm looking at the one you just put in. What about Remitly? Yeah, take a look at tomorrow. I thought this was Tony Hawk, okay? Why not over 300? Personal thing. Oh, Pfizer. We'll take a look at that one. Well, you could be buried in it. Hey, Shark, want to hear a funny story? This guy he's on his deathbed. He gets his three best friends together, okay? It's friend number one. So I'm going to give you $5 million. When I die, stick it in my casket. I want to take it with me. He says it to all three of them. When I die, gave each one of them $5 million. When I die, stick it in my casket. I want to take it with me. On his deathbed. So at the funeral, the first guy goes up there and he stuffs all the money at his feet. Second guy's going in and he stuffs it, and he stuffs all the money under the pillow. He says, yeah, I saw that money put in the feet. I put it under his pillow. Third guy goes in, yeah, I put the check in his front pocket. Please, gold, buy or sell. No, sorry, I don't do gold. Done. 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 We're done. Yoo-hoo! Thank you, everybody. See you in the morning. All right, see you guys in the morning. And for those of you, see you tomorrow night. Now, I don't know what I'm going to be signing in tomorrow night because I will be in Chicago, so we'll be doing it from there. Wait a minute. Tomorrow's Wednesday. No, we'll be here tomorrow night. Thursday, I'm going to Chicago. Yeah, that was a funny one. You like that one, Dr. Dev? Yeah. Trust your good old friends. Yep, I put that check right in his front pocket. All right, you guys have a great day. See you guys in the morning over here on Zoom. And now the end is near, and so I face the final curtain. My friends, I'll say it clear. I'll state my case, for which